Hello, good evening, ladies and gentlemen, traders and investors. Alex from MarketWise Asia. Thank you for tuning in here. So, first of all, just say a good night to my daughter first. So, Jenny, go and sleep. Good night. Okay, see you later. Okay, and yeah, Alex here. So, if you can hear me loud and clear, please say a hi to me in the comments, both in the chat box or in the comments also. Okay, this live stream is broadcasted to both YouTube and also on Facebook as well. So do say hi to me, okay? Just let me know that everything is good, everything is fine, and also let Facebook algo and YouTube algo know that you want to see more of MarketWise Asia content in the future, okay? Liking just takes you 1 or 2 seconds, maximum 3 seconds. Just press only, okay? If you're watching this on YouTube, please like and also subscribe to our channel as well, okay? All right, so let me take a look at the comments right now. Hello, Dave, William, Hadley, Louis, Mark, Cal, Bernard, okay? All right, so if you can hear me, all right, just say hi to me in the comments. People are streaming in, right? So give me a like, share, or comment over there. So, all right, so last week, right, I mentioned about the VIX, right? Okay, so I said that the level actually hit 3 standard deviation. Apparently it seems like not too bad, right? Once it hit the 3 standard deviation, market did not actually go down further and in fact recover most of the losses on Monday. So it recovered pretty fast. So that's why I say, right, do not short it. It's not the risk, the reward to risk ratio is not for you to short it. Okay, in fact, you should be looking for opportunity to buy. But again, it doesn't mean that short term wise, you're gonna go up. Okay, later I'll share with you my view. Okay, but if you're looking for longer term, maybe 6 months and above to 1 year, I think that presents a good buying opportunity. But again, later I will share with you my views. All right, so Denise, okay, James, Melvin, Leonard, okay, another Haley enter, okay, good to see you. Tong Tong, okay, Wai Lam. All right, so let me share my screen right now. Okay, so let me do this, zoom out a little bit. Okay, so that will be good. Okay, Melvin, what do you think of buying physical gold and keep? Later I share with you lah. Okay, later remind me again. Okay, Josh, okay, good to see you. Okay, so as usual, a disclaimer first, whatever I share today is just for education purpose, not a recommendation to tell you what to buy or what to sell. So please do your own due diligence. All right. So today's session, right, should be pretty fast lah, because okay, my views hasn't changed much, and yeah, right now we are still awaiting important so-called data coming out from the Fed. Okay, actually that is Wednesday when the CPI data come out. Okay, I'm ahead of myself already, but later I'll share with you more. So right now there are more than 100 people in the room already. So I can see very little likes. Just give me some love likes, okay? Can just hit the like button on the YouTube or on the Facebook channel. I think the like button that's showing up is actually Facebook. So just give me a like, okay? If you want to put a hate button, unhappy button also can. All right, just let Facebook algo know, okay? All right, so before I kickstart, right, just want to let you know, the Market Insights Trading Festival, okay, is coming up, okay, this coming Saturday, okay, this coming Saturday on the 17th of August, this coming Saturday, okay. In fact, we have promoted via the social media, some of the advertisement on Facebook and such, okay, and also 1 or 2 email coming out. So because we have limited seat, because we don't want to just blast out everywhere, so that just really limited seat, okay. So right now we are almost filling up already, okay, 90% is gone already. So the Market Insights Trading Festival, in case you don't know, I'll post the link in the comments over here, okay. Inside comment, this is the Market Insights Trading Festival. This is a face-to-face, okay, in-person event, the IG Market Insights Trading Festival. So of course, it is proudly supported and sponsored by IG. So we are nearing towards the end of 2024, okay, heading into the so-called last quarter very soon, okay. So the market outlook for the last lap of 2024. So as I mentioned, it is 17th of August, this coming Saturday, all right, from 10 a.m. to 3 p.m. at Suntec Convention Center. So all you have to do, all right, is just to click on the register now button, okay, and you'll be directed to this external Eventbrite, okay, so-called sign up page. It is within the website, but it is actually going to Eventbrite. I can see that there's only few tickets left. In case you can't see, okay, actually there's this thing, few tickets left. It's blocked by my camera. So just click on register. Okay, and Eventbrite will send you all the details and such. So just to let you know, okay, we have Daryl Guppy as the keynote speakers. It has been quite a while, okay, since we invited him many years already. But I know he is, for those who know him, okay, he is actually the inventor of this Guppy moving average, GMMA. I think some of you might be so-called using it, and he's the inventor of it, okay? And he's a prominent so-called master investor and trader in Australia as well, okay? And we have Binny Ong, okay, and Kai Yong. He's actually flying in, okay, from KL, okay, to speak to you in person. So see, this is from overseas, okay, flying in, okay, to speak to you from Kai Yong, and then from Jin Rong from IG, the strategist from IG. Okay, so and not only that, okay, you stand to so-called participate in our lucky draw on the spot itself. So after the event, okay, it's over right on the spot. We also draw out the winners, okay, for this 2-day, 1-night Singapore to Klang Genting Dream Cruise for 2 days worth $300 and other gifts as well. And not only that, okay, for the first 200 attendees, right, for the first 200 attendees, okay, IG is giving out the exclusive goodie bag. Okay, we do have the travel mug and also the travel adapter as well. That's worth $68. That's worth that is for the first 200 attendees only. Okay, I think quite a number of you have already registered already. Okay, so just in case, okay, you have forgotten, okay, don't so hastily go and register first. Okay, go and search for Alex at MarketWise Asia. Okay, email and then Eventbrite. If you have registered, okay, you should have gotten an email from Eventbrite. Okay, you will have it, you have it. Okay, either in your main folder or spam box. Okay, you can do check it out. But you receive an email from Eventbrite as well. Okay, and for those who haven't, okay, do register for this event. Okay, so some of you have been asking what is the agenda. Okay, so the agenda for so-called the session itself, right? So Bini, okay, we'll be speaking from zero to hero, how to scan for opportunities poised for massive gain. And Jin Rong, okay, he was sharing the market outlook for the second half of 2024. Okay, whether it's the continuation of a bull market or whether the bear is coming soon. Okay, and Ka Yong is going to talk about so-called algo trading, how he made 3% okay per month for the past 3 years. That is very consistent, okay, with algo trading. And Daryl Guppy, our keynote speakers for the event, okay, and talking about China and Hong Kong market, because I know there are many so-called audience here. They are really interested, okay, in the Hong Kong and China market, okay. So we're sharing with you the key trends shaping up the last lap of 2024. Okay, so once again, you should see the link in the scrolling bar bottom, and also once again, last one, okay, I will share the link over here in the comments box. So in case you can't see, right, okay, this is the link. I'll just zoom in a little bit bigger. All right, this marketwiseasia.com/MITF2024. Okay, everything clear so far. Okay, just type okay in the comments. Okay, just type okay in the comments before I continue there. So again, for the first 200 attendees at the event itself, okay, you get exclusive IG goodie bag that's worth $68, the travel adapter and mug as well. Okay, and last but not least, okay, do subscribe and follow our various social media channel here. I can see Gilbert. Hi, Gilbert. Okay, thanks. All right, and yep. Okay, so let's kickstart into today's session. All right, so last week, okay, if you missed my session, I think last week was a very good session. Okay, really a good learning point for maybe, I think, for many of you guys, okay, because I don't really share this, okay, about the so-called whether it's a good time to buy based on VIX. Oh, by the way, I forget to tell you, for this Market Insight Trading Festival, there will not be selling of courses by the speakers. Okay, so don't worry. Okay, just come attend and learn. Okay, for the outlook and for the insights. For those who have attended the previous face-to-face in-person event in April or last year July, right? You will know that we don't sell courses at the event. So the full hour will be knowledge insights. Okay, so just let you know first. Okay, and then yeah. So stocks nearly regained all the ground they lost on Monday. So when I first mentioned last week, right, you can see the S&P 500, okay, S&P futures over there, okay, it was initially a very huge gap down over there, okay, and then by the end of the week, it recovered all back up, and today, at the start of the week, okay, it really recovered the losses from last week already. Okay, that's why I say, okay, you should not you should not actually short it. In fact, it presents a good buying opportunity, right? Do you remember what I said last week? Okay, if you remember, just type VIX in the comments. But again, I want to repeat again, it doesn't mean that it is going to be a immediate good buying opportunity. Okay, so I will share with you why. But if you're looking ahead, maybe 6 months to 1 year down the road and above, right, then that will present a good buying opportunity. Okay, just type VIX first before I continue. Just type VIX first. All right, there are so many of you here. Just type a VIX in the comments. Doesn't take you maybe less than 2 seconds. All right, okay, I see some response. I think it's always the same few supporters. Okay, for those who just know about me, maybe you just join me, okay, because of the Market Insights Trading Festival. Okay, do engage with me, okay. Then I'll know that you guys understand me. Okay, think very fast, okay. And all right, so and CPI inflation data will be the next important catalyst. I think just now there's one comment whether the PMI data is also important. Yes, both are important, but most of the time, okay, retail investors or retail traders mostly know about the CPI data. But okay, just to let you know, for this coming week, okay, Tuesday, Wednesday, there'll be important data. So this is taken from the Forex factory over here. Okay, as usual, nothing much change for this coming week, August 12th. And let me just zoom in a little bit more. Okay, so the core PPI, okay, for more for the so-called the industrial one, okay, is out tomorrow. Either one will be a key catalyst, okay. So it depends, or maybe can do tomorrow. So, but again, this is just data, okay. If the market really want to go up, okay, and go down, okay, they will use any of this data, okay, and say that, oh, because of the PPI up or down, the market crashes or the market went up. Okay, maybe tomorrow, okay, the PPI data, okay, might not matter much. Okay, all right, but instead they will say that, oh, the CPI data is do this, do that kind of thing. Okay, then that will be a catalyst for the market to have a reason why they went down. Okay, so again, okay, the previous so-called numbers is 3% inflation data. The expected forecast is 3%. So once again, this will be the key one. But again, either one will be a catalyst for the market to have a reaction now. So again, these are just data. Okay, whenever the market crash up, as in go up or crash down, whatever it is. Okay, the media will explain the reason why. It can be core PPI, it can be the CPI data, that kind of thing. So it is not that important. The important thing is that you just need to know that there is data coming out, okay? But looking at the price action, okay, I have a reason why I think, okay, you need to be a little bit more careful, okay, in this coming week and the next 1 or 2 weeks or so, okay? But having said that, okay, also want to let you know that the options expiry, okay, is this coming Friday, 16th of August, okay? So I've always shared this before. This is the OPEX 2024. The data, not the data, the PDF. Okay, I shortened the link over there. So, okay, I'll post the link in the comments in case for those who just joined. So this is the OPEX options expiry, okay, where all the standard expiration for equities, index, ETF, and ETF option. This coming Friday. So again, prices could be volatile, but normally heading into OPEX, okay, the market tends to go a little bit higher, that kind of thing, but not always, okay, not always. And given the fact that right now, the market is a little bit under pressure, okay, and below the key gamma level, so might be a little bit more tricky, but nevertheless, okay, market could be volatile heading into this options expiry this coming Friday on the 16th of August. All right, and also this one was last week one. So let's take a look. Okay, let's take a look at whether the rate cut in September, what is the percentage right now. So I did not really check. So let's check together right now. For those who know what's the number, All right, so for those who don't know what's the number, let me take a look. And for September, hey, okay, there is previously was like 90% that the Fed will actually cut 50 basis point, okay? That's 0.5%, okay? But right now, it seems like, okay, it is like 25 basis points. So can you see over there? So the odds has changed. So it's like 50-50, so it's 50-50. There's a 50% chance that the Fed will reduce the interest rate by 0.25%, okay? Right, because right now it is 5.5%. If you drop to 5.25, then it is actually a drop of 0.25%. If it drop to 5%, then it will be a drop of 0.5%, okay, 50 basis points. So right now the odds is 50-50. So right now, what do you all think? Do you think that the Fed will drop, okay, 50 or 25? If you think 50 basis point, just type 50. If you think there's 25, just type 25. Henry said 25 basis point, and then tomorrow will change now. Yeah, so it kind of change every single day based on the new data that's coming in from the market. Of course, if the market tomorrow say that, the CPI drop, that kind of thing, PPI drop, then they say that, the inflation is not a problem, okay? The Fed could actually have the bullets to so-called reduce the interest rate, that kind of thing. So the CPI data could move the market as well. Okay, but nevertheless, I think it is quite certain that the Fed will start to reduce the interest rate, okay, in September, okay, in September. All right, and okay, and also just to let you know, okay, right now the S&P cash index level, this is the futures level. So the S&P cash index level, okay, the zero gamma level, okay, okay, it is at about 5480, 5480, okay, 5480 gamma level, okay. For those who don't know, it just simply means that whether the options dealer, okay, they are having a net positive gamma or net negative gamma. Right now, they are net negative gamma, okay, below this zero gamma level, okay, so it's net negative gamma, okay. In short, okay, there could be more volatility, okay, and yeah, and if really price really do crashes down, okay, the options dealer have to sell even more, okay, to hedge their position. That could cause more volatility, okay, which means that, if price goes down, options dealers sell more, okay, prices go down lower, options dealers sell even more, okay, to hedge their position and go down lower. So that causes the volatility. So if you want the volatility to subside, okay, price need to at least above the 5480 right now. But of course, these numbers do change every single day. But as of now, it is at about 5480. Okay. But of course, you can see that our central pivot range, okay, we are below the central pivot range right now already. So previously, you can see that the CPR, the central pivot range, okay, we have always, most of the time, we have always been above CPR, drop down a little bit more, but supported by the cloud, okay, and then reverse back up, supported by CPR. So this is the first time, okay, right now, for a number of months that we are below the CPR again, okay, and we are kind of supported by the cloud, okay, and hovering go up again, okay. What's your bias for S&P now? But Melvin, okay, I think obviously you did not go and watch the video yet, right? Okay, for the seasonal vantage insiders, okay, I explained that, but I will explain also to you, to the audience right now, okay. So that's where I'm going to come in right now, okay. So for last week, okay, remember last week, right? I mentioned about the VIX, right? VIX. Okay, I'll do a naked chart. Okay, I love naked. Okay, naked. Okay, so naked. So as I mentioned, right? Okay, not a lot of times where the market will actually test the 3 standard deviation. Okay, I won't go through back again the previous years that I can scroll through. But a lot of times, when price really, touch the 3 standard deviation, okay, it presents a very good buying opportunity. And when actually price hit the 2 standard deviation, that was a good correction. Okay, that's a good correction. But 3 SD, there is some fear in the market already. Okay, so and yeah, so I said that hey, that presents a good buying opportunity. Okay, so yeah, so price after that VIX come down, the market actually went up. The market actually went up. Okay, from now. Okay, from not from now, from the low of this, okay, S&P when the VIX was spiked up. Okay, all right, and yeah, PLE said, how do you teach how to set up the trading views? Later I'll share with you the YouTube video lah. Okay, all right. So okay, but that is if you holding period, it is about 1 year and above now. Okay, but as of short term, okay, I want to put in my Facebook Live. Okay, with the pivot point indicator. Okay, and all this, there's a number of lines here. Okay, maybe I remove the line first. Okay, first of all, okay, you need to understand certain things. Okay, all right. I show you the stats first. I show you the stats first. The stat, it is, I think I'm ahead of myself already. So let me just go through here. Okay, so this is actually what I'm going to share with you is actually okay, the S&P 3-month seasonality return. Okay, this source is taken from I think Bank of America. Okay, global research. Okay, and this is a 3-month period. Okay, from all the way from 1928. 3 months as in like could be January to March, February to April, March to April, that kind of thing, April to June. Okay, of course the standard one is like January to March, first quarter, April to June, second quarter, third quarter will be like July to September, third quarter, but can be any other month, like for example August to October. And you can see that, okay, August to October, it is like the so-called not the norm. And it's one of the worst month, okay, one of the worst month in the whole month, worst 3 months of the whole period. So August to October, okay, so-called have a return of negative return, 0.14%. Okay, the market generally go up. Like I can see that generally it goes higher, but you can see that of course there's different performance, and the worst return, it is actually August to October, where the return is actually negative 0.14%. Can you understand what this chart is trying to say or not? It is just telling you that, okay, August to October is not the best 3 months for the stock market. Can you understand? Can you understand? Just type, okay, letter Y in the comment. Just type yes, yes, yes in the comments. Okay. All right, so you can see that August to October has been the weakest 3 months period of the year, with the S&P rising, okay, only about half of the time, and an average return of 0.14%. Okay, can and having said that, okay, as I mentioned right last week, okay, tell you guys to be don't be scared, okay, 不要怕，不要怕, okay, it presents a good buying opportunity longer term, okay, and again, just some data to share with you guys. Okay, so the data, it is over here. All right, this is taken from Carson Research, okay, and from Run the Trade. So you can see that, you know, the max pullback per calendar year. So from the very peak to the very low, the trough, right? What is the max pullback? So you can see that, you know, typically, you know, the market generally, you know, go higher. That's why I can see the S&P return. Generally, it is positive most of the time. Of course, you know, like for example, 2008, you guys should know lah. This is the global financial crisis. Then about 2000, 1999, 2000, there is the dot-com crisis. 1990, also 1970, 1980, something also some recession and such lah. Okay, but just nearby, you should know that the market always go up most of the time. Okay, and the market, the max pullback, okay, the average, it is about 14.2%. Okay, average about 14.2% max pullback in a calendar year. But okay, this is taken into consideration of the, you know, the very severe drawdown. So this is an average. So it doesn't really kind of represent the median. Okay, but if you take out those extreme level like 33%, 40%, 50%, that kind of thing. So you can see the average. The price tends to cluster around this level. This is not price as in the drawdown tend to cluster around this level. So take a middle section of this. So you can say that typically, I would say that within a year, a 10% drawdown, it is normal. I repeat, in a typical year, okay, every single year, okay, a pullback, 10% drawdown, it is normal. And based on the average, okay, average is 14.2% drawdown. That is considering taking into account of all the severe market crashes lah. But average, I think that 10%, okay, it is actually normal. Okay, can put 10 on number 10. Okay, so don't be afraid of pullback. It is normal. Okay, and again, having said that, okay, all right, based on the seasonal data over here, okay, you know that August, September, October, it is not a so good month, right? So you need to be a little bit more careful. And moreover, okay, right now price is below the CPR already. So again, you need to anticipate, okay, what price could do, okay? And actually, there are a few so-called reasons why I think that the market could go down. But I think actually I think I forget to share to the SBI today, but I will share again later. Okay, maybe tomorrow while I see how it goes. But nevertheless, okay, you need to anticipate what the price could do. So even though maybe in the long-term wise, price could do something like that, go up, right? Okay. Short-term wise, the market could be volatile. The market could be very volatile. What could it do? Okay, that's why you need to anticipate. So there's a few scenario, okay, which I tell my SVI members over there. Okay, first of all, okay, I'll add in the lines over there. Okay, based on experience. Again, this is discretionary views based on experience. Okay, the market usually, okay, after a kind of severe crashes, a pullback, okay, correction, okay, they don't usually like do a very fast V-shaped recovery, okay, unless you talk about COVID-19. That was a very rare kind of, a very strong sell-off that immediately rebound, that kind of thing. But most of the time, okay, the market could do a few things, okay. It could do like this, okay. It have a correction, okay. You'll go up a little bit, okay, hit a resistance level and then retest the low over here, okay, hunted the low over here, okay, and then rebound up again before price gradually go higher. Okay, so this is one scenario that could turn out. The second scenario is that price could, okay, after that have a so-called a minor correction after hit a low over there, hit a resistance level, have a minor correction, okay, again pull back again, okay, but this low, okay, did not go lower than the previous low over here, so it forms a higher low. This low is higher than the previous low. Okay, so this is a higher low. So price will maybe ping pong for a while, okay, and then go higher up. Okay, all right. And the third scenario, okay, I think which I didn't mention to the SDI, okay, it is like just price just hover, range for a while, up down, not moving, okay, maybe until October, then start to go up higher again. So there are a few things that the market could do. So I've listed 3 things already. Okay, I repeat. So one is that price, okay, retest the low again and go higher. Second, it is price could we retest the have a correction, did not test the previous low and then go higher. This is the second possibility. And the third possibility that price just after that just ping pong all the way, okay, for a while until October and go higher, that kind of thing. Or okay, the market like maybe really do a V-shaped recovery and go higher like that. So how many things have I listed already? 4 possible scenario, right? If you understand what I mentioned about these 4 possible scenario, just type number 4 in the comments. Number 4 in the comments. Let me take a look at this. Nothing much on that. Okay, fantastic. I can see a lot of comments here. But at this point in time, okay, if you understand what I'm trying to say, okay, you answered 4 already. I also appreciate, okay, right now we have more than 200 people combined on Facebook and YouTube, okay. Do give me a like, share, and comments if you find my sharing valuable, okay. All right, so just give me a like, share, and comments if you just want to do the simplest thing, okay, just like it, okay, just like it. All right, Ken? So as of now, my personal view, okay, I could be wrong. Again, this is my opinion already, discretionary view, okay. My view is that, okay, the price, okay, could do something like this. So this is the S&P 500 future. So as I mentioned, moving towards the OPEX, price could maybe grind a little bit higher. Price could grind a little bit higher, okay, and then hit the S1 resistance level over there. So if you zoom in level, okay, you can see that this S1. So when price tested the resistance level at pivot point, price go down, okay, broke below the S1, S2 level, rebounded. So this will be acting as a strong resistance level at the S1 level. S1 level, it is at about 5420, okay? S1 5420. This is based on the S&P ES futures level 5420, okay? And then I expect price to have some correction, a pullback again, which means that there could be some second wave of sell off. Again, how steep the sell off, I don't know, okay? How steep the sell off, it could just, as I mentioned, the scenario, price just go like that, okay, and rebound up again, or maybe price just retest the low again and rebound up, that kind of thing, okay? All right, same for the Nasdaq, okay? We are also nearing the so-called the minor resistance level at the Camarilla level area, okay? Not important the Camarilla level. Basically, just want to tell you that we are hitting a resistance level over there, okay? Resistance level over there. All right, so, okay, so price could go down like that, okay? But we are almost there, okay? And then for the Russell 2000, okay, it is the so-called the weakest. All right, so here's that price actually go down like that. It seems like it's forming a flat pattern. So again, I don't know whether there is a second leg or not. Okay, whether there's second leg or not. So, but again, this is my personal view that the market could go down further. So the very nearest support level, of course, will be this low over there, okay, where price will retest the low again. So personally, I would prefer, okay, if the market, okay, really will actually go down and test the low again. Okay, we'll test the low again. All right, so what about election year? Shah is asking. Election year, I think I mentioned many times before, okay, during election year, the market typically tends to go higher especially towards the end of the year. But again, as I mentioned, right, seasonally, historically, September, October, weaker month, it is perfectly normal. So, I really do anticipate, okay, some pullback. So it's quite normal if price really, don't go up again, have some, consolidation, ranging, or some pullback. That's perfectly normal. Okay. Arden is asking, will you short? Yes, I have already shorted some of the stocks already, which I mentioned to my SVI members. Okay, so for those who are in SVI, have I shared with you what I have shorted? So far, the one that I have shorted previously, right, which I'm still holding, right? Okay, let me take a look at my position right now. Still doing quite okay. Okay, so for those from SVI, I already shared with you what I'm looking at for this week and previous week, what I have shorted. I already share with you already. If you are from SVI, you know what are the details. Okay, just type me in the comments. Just type me in the comments. Okay. Oh, so then you are from SVI. Okay, I thought you are not. Okay, if you are from SVI, then you should know already lah. Okay, I already mentioned already. Correct or not? Okay. Oh, Pei Wen asking, what is the chance the market to go lower than that Monday low? To be really, really honest, okay, you ask this kind of question, I don't know how to answer. I have no idea. So as I mentioned, I'm a swing trader. So I take 1 day at a time. Okay, I take 1 day at a time. But again, if the market really, really do break lower, okay, and go down below the previous low on Monday, I'm not surprised also because we still have about 2 more months to go. 2 more months to go. Price can do a lot of things. Price can do a lot of things. Okay, all right. Only Christina answer me only. The rest SVR. I think there are quite a number of you guys lah. Okay, all right. So yeah. So if you have, I really shared that to the members already lah. Okay, so if you haven't really checked, okay, go check it out. Okay, and also at the Telegram group also. Okay. Okay, fantastic, William and Gilbert. All right, thank you so much for your response over there. And yeah, so any questions so far? Right now, only about 40 minutes. Okay, I am going to share with you one key ideas also. Oh yeah, by the way, okay, maybe let's go through the members area over there, okay, just to share with you for those who a case study over there. So what have happened? Okay, so for example, over here, okay, 5th of August one, when I first mentioned, I shorted, right? Okay, XES, SCOO, BTRS, EWS, all this came down. Okay, all this came down. Okay, Alex also shorted the STI. So the latest one that I have taken profit, okay, it is actually BTRS. Okay, so this one just to share with you. Okay, this, okay, for example, oh, this is the member success. Okay, right? For example, this is John. John actually shorted Beatrice VTRS. VTRS short was a short, but Alex was spot on. Okay, TP just before the post earnings. So I mentioned VTRS before. So just case study VTRS. Okay, so this is Beatrice. Okay, when I first mentioned, okay, it was, I think it went drop out. Okay, when it first mentioned, it's somewhere around here. It was somewhere around here. Okay, price have a good drop. Okay, from a swing trade perspective, from holding for a few days, you can see the price actually drop from a high to somewhere near the CPR level. So at least for me, okay, I have a positive 1.5 R return, which means that if I risk $1,000, I get back $1,500. Okay, that kind of return, it is pretty good enough for a swing trade. Okay, and then there's the earnings one. Okay, of course I exited lah. Okay, I don't want to hold on to earnings, and of course earnings. Okay, it is like buying 大小lah, big small gambling lah. So no, I do not have to hold through earnings for swing trade. Okay, so price gap up, so I did not hold through the earnings. Okay. All right, so these are the one, and so actually for this coming week, okay, I do have some so-called insights that I don't want to go through too hard because I have some trade ideas mentioned there. But anyway, yeah, I do have some positions shorted already. So this is Beatrice. Okay, so for this coming week or next week or so, okay, just want to share with you. Yeah, I did not. Okay, let me try to save it here. Give me a moment. Give me a moment. Let me copy the file here. Okay, copy the file here. Okay, time to share with you here. Okay, so this is the data which I shared with my insiders. So I don't mind sharing with you right now just one key ideas, one trade ideas for you to take away from this free sharing session over there. Okay, so I mentioned to them, so every week, okay, we'll look at this coming week one. For every week, okay, we'll look for this coming week, okay, like from 12 August onwards, okay. Actually, from this week is 11 to 18 of August lah. It's 11 to 18 of August. Yes, that's right. So we look for this coming week. We'll filter out what are the stocks that we should be looking out for, or the ETF that we should be looking out for. So I actually filter out the rest. Okay, something that caught my attention. Okay, what do you all see? Can see or not? What do you all see from here? What do you all see from here? What are the things that you see from here? MH, okay. All right, you actually go to the members area over there, members area, okay. I think yeah, can you see it over here? Okay. Market updates and sectors to watch over there. This is the Telegram group, okay. Yeah, and you can go and click here. By the way, since you guys are already here, I mean that this is a public Telegram group also, okay. To give you a glimpse of what the market it is doing also, and what SGI are doing also. So, you know, of course, for the members, right, I will share with them certain updates. I will share with them that actually you need to log in and watch lah, okay. But you are free to join if you want to lah, okay. If you can catch it, okay, you catch it. If you cannot catch it, never mind. I won't post the link publicly here lah, but it is a public group. It is a public group. So okay, okay, so you MH, right? Head over to your members area, you should see the link directly lah, okay, and just go to join this Telegram group over there. Okay, Ken? All right. So yes. I see a few join already. I see a few join already. So I don't know whether you are members or not, but nevertheless, okay, members, you still need to refer back to the members area. But okay, for those who are public, it will give you a glimpse of what SVI it is about, lah. Okay. All right. I see a few join already. Okay. All right. So yeah. So this is the, where is it? Okay. So let me join. Okay, so you can see that go, pressures down, pressures down. Okay, so you can see that this is the bearish ETF, bearish ETF over there. Okay, so it gives you the insights that the gold miners 12th of August to 1st October. Okay, 12th August to 1st October. Okay, for the past 11 years, okay, 91% of the time it is down. Okay, which means that over the past 11 years, 10 years it is down. Okay, 10 years it is down. Okay, for the silver miner, it remains also about similar. Okay, 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 all right, for 13 August, okay, all right, 13 August to 25th September, for the past 11 years, 91% of the time it is down also. Okay, so right, so you can infer. Okay, it doesn't explicitly say that, you know, gold, silver is going to be down, okay, and plus the gold, junior gold miner, but you can infer from that that actually, seasonally, okay, gold, it is not good, gold, it is not good, Yes, Mary, that's why I say infer, it does infer that gold, it is not really good also, okay, yeah, gold is not really good. So if you also can go to equity clock, okay, maybe just type gold, okay, this is a free for all, so this is a gold futures. Let me see whether I can see right now. Okay, maybe I'll go from here. This is the commodities, platinum. Oops. In recent years, gold is actually not so good. Let me see. Wait on, let me. Okay. Okay. Yeah, lah, for August to go up, but I can see that, you know, somewhere around, this is for the past 20 years, but in recent 10 to 15 years, okay, the gold from my data sources is actually not so good. You can see that maybe towards the end of August, that kind of thing, right, it's starting to go down lower. So you can kind of prepare for that. And typically, okay, I find that the gold miners, okay, tend to move ahead of the metal itself. Okay, yeah, so you need to be aware of that. So definitely, okay, for gold, right, where is it? Okay, for gold, okay, towards the end of August onwards, not end of August, yeah, end of August, it is seasonally not so good already. Okay, so right now we are in the mid of August. Okay, the gold miners is starting to tell us that, you know, based on seasonal data, it is not so good. Okay, where is it? The seasonal data for gold miners, okay, from mid of August onwards. You can see that, okay, the period, it actually lasted quite a bit, okay. Of course, it doesn't mean that every single week or so price will just crash down, okay. But this is the data from 12 August to 1st of October. So this is what I provided to the SVI, okay. From some of the data sources, the equity clock, okay, they don't provide the actual data. They don't provide the exact date. So every single data provider, they do have their pro and cons. Okay, my pros is definitely, okay, I do provide the actual specific date as well for the many of the ETF and the stocks as well. Okay, so we can take a look at the GDX right now for example, okay, like gold miners. Okay, so today it continues to go higher. So like I always tell my SVI, you know, members, okay, you have to wait for a trigger, have to wait for a trigger. Okay, if there's no trigger, okay, then let it go first, okay, wait for the trigger. So again, today price closed higher. So let's say, for example, in fact, I was waiting for price today whether to have a wash and rinse. Okay, I'll just do a, let me just do a naked chart. Okay, I think it is easier. Okay, I'm actually waiting to see whether GDX, this is on Friday, there's a potential wash and rinse where price closed higher than the previous day high. I was potentially waiting whether there's a wash and rinse pattern, but it did not, where it did not. So price goes higher. So this wash line will actually go higher again. So the wash line, it is actually high. It is actually 35.89. 35.89. Okay, so again, right now the night is still young. I don't know how the market will continue. Okay, that's what will continue. Okay, so let's see. Okay, whether price can go down lower. Okay, if maybe tomorrow onwards. Okay, maybe for example GDX today, the prices ended like this. Okay, maybe today the prices ended like this. Okay, if tomorrow price go down like that, okay, and close below the wash line at about 35.89, then okay, I will be interested to go for short on the gold miners or the silver miners and such. Okay, again, this is just my opinion. I'm not asking you to short. I'm just telling you that what I would do if based on my data, okay, but I have not had a short position yet. Okay, so this is not a trading advice, okay, but just to tell you what has happened in the past. In the past, where is it? In the past is okay. Data, quantitative data tells us that. Okay, clear so far? Clear so far? Okay, understand so far? If you understand, just type okay in the comments. Okay. There is one trigger. There's one trigger from one short idea from SCBI. Okay, later I'll take a look. Okay, for those who are from SCBI, you should know lah. There's only that a few ideas that I'm sharing. Okay, in fact, John also share a few. Okay, I think these two are not too bad as well lah. Okay, Ian Tan is asking, not asking, I'm commenting that gold and silver, it is a hedge against a risky asset. If it's going down, it is a better no. Okay, the answer is definitely a no. Okay, sometimes people always, I don't know where you guys have the mentality that, oh, gold is a hedge against, don't know what thing, it's a hedge against inflation, it's a hedge against what? No, it is not like that. Okay, it is not like that. Okay, when the market crashes, okay, when the market really crashes, okay, everything will crash. You can go and check it out. All the past few crashes, everything will crash also. So gold is not spared as well. When there was inflation, okay, there was a period of time gold also went down. Okay, so to me, I mean that don't listen to like the textbook example or those media saying that gold is a hedge against certain things or don't know what. Don't listen now, okay? Don't listen, okay? We look at the price action. Okay, and trade accordingly. Okay? Don't say that and don't try to always have a so-called link it to certain asset classes. Okay, the correlation will change. Okay, it is not static. Okay, the correlation will change. It's just like for the past 50 years or so. Okay, people are saying that when the S&P go down, the treasury bonds will go up. Okay, it has been working pretty well. Okay, for like the past 50 years until the inflation shot up. And when the Fed has to increase the interest rate aggressively. Okay, then the bond price also just crashed. So at the same time, okay, I think in 2022, okay, when the S&P crashes, the bond price also crashes as well. So it correlated together instead of inversely correlated. So all this so-called relationship, it is not it's not static. It always changes. Okay, can so far not? You get my, if you get just type letter Y in the comments. Just type Y in the comments. Yes. Okay. So yeah, don't listen to all this media say all this as a hedge against this, hedge against that. Okay, it's correlated. Okay, the relationship always changes. So we must always look at the current price action and see what it is, the price it is doing. Okay, and for GDX, okay, GDX wise, right? It is looking like to me like a bear flag to me also, like a leg down and then like that. So we shall see how it goes. And looking there, you can see the price actually hit the central pivot range today, the lower band, and it seems like there is some reaction over there. Okay, so we shall see how it goes. We shall see how it goes. Okay, all right. Oh, by the way, Mary, okay, we will sell my GLD position. This is short-term perspective lah. So because I don't know what it is your long-term perspective, because you could be holding for a long-term, 5 years, 10 years down the road, and you're very bullish on gold. I'm just sharing in terms of a shorter-term perspective, like a swing trade holding for 1 month, that kind of thing. Okay, so don't let my comments affected you that you should sell your maybe a long-term gold holdings. Okay, this is more for short-term. Okay. When the market crashes, the only one thing will not crash is certainty is cash. Yes, that's right. So when the market crashes, okay, it it depends on how much cash you have, so they can scoop up all the undervalued things. But having said that, it is easier to say lah. It's easier to say lah because when the market crash, people always scared one, don't dare to buy. After the market ran up already, then they, how come I never buy? It's always like that. But yeah, you're right. Okay. When the market crashes, okay, it is always good. Okay, cash is always king. Okay. Any questions so far? Any questions so far? Okay. By the way, okay, additional information today, like RTY, it is not doing so well. The Russell 2000, okay. Okay. By the way, do you guys know, right? Okay, if you are shorting the small cap, okay, what are you exactly shorting? Okay, you guys know or not? I actually mentioned in today's SVI video. I think I can share with you guys also. Okay, I repeat, if you are shorting the Russell 2000, okay, or the small cap stocks or the small cap index, what exactly are you shorting? Because the Russell 2000 is a component, okay, it's an index that comprises of many stocks. So anybody can tell me the answer. What exactly are you shorting? What exactly are you shorting? Okay, what exactly are you shorting? Henry said already, banks and biotech. So if you actually go to this ETF.com, IWM, this is the S&P, not S&P, this is the small cap ETF, Russell 2000 ETF. So if you go to the it is still loading. Okay, so you go to the holdings. All right, you can see that the IWM, I think a bit small. Okay, I just zoom in. Can you see that it is actually finance and health technology? Okay, they might think finance very big. Which industry? Actually, this is the regional bank. The small banks. Health technology, it is actually biotech. Okay, because I have the data over here, so let me just share it with you over there. Okay, because I have all the data for Russell 2000. So in fact, for Russell 2000, okay, it is not exactly 2000 stocks. It is only about 1,800 stocks, about 1,009 stocks. Okay, and if I actually like for example do some analysis, okay, industry, okay, right, you can see that the it is actually banks, regional, and the biotech. Banks, regional, and biotechs. Okay, all right, and if you actually go and drill down the number further, okay, out of the 1,008, okay, about 25%, okay, it is actually banks and biotech stocks as well. So if you are shorting the Russell 2000, you are actually so-called like shorting the regional banks and the biotech. Some software, smaller cap, it is also pretty a lot. Okay, yeah. So you know exactly what you are doing or not. So you can see that, okay, you can see that actually the Russell 2000, this is the this is the index, right? Russell 2000, right? Okay, you see the price action right now, the index, okay, like what Henry say, okay, right? Henry said the KRE, the regional bank KRE. Okay, I will do this. Oh, no. Okay, so on the right hand side, it is the Russell 2000 here. Right hand side, on the left hand side, it is regional bank ETF. Does the price action looks pretty similar or not? Does it look pretty similar to you? If it is pretty similar, okay, similar, just type S in the comments. You judge yourself, is it pretty similar or not? The price action. The candle, just see the candle. Similar, right? So typically for regional bank, during this period of time in August, September, it is not so good as well. It is not so good as well. So a bit wary of the Russell 2000 as well. Okay, all right. So do you learn something new? Do you learn something new? If you learn something new, okay, just type new or type letter N in the comments. Okay, because sometimes okay, people talk about, oh, I think the small cap is not doing well, that kind of thing, right? Or it's like going up very well. Do you know exactly what is the components of the small cap or not? Okay, it is actually a big portion, not so very big, okay, a part of it, a portion of it is actually the regional banks and the biotech stocks. This is what the Russell 2000 is. Okay, the component stocks. Okay, all right. Any questions so far? Any questions so far? And also want to share with you, okay, if you have a question, just tap it in the chat box. Okay, so for today, you can see that the Russell 2000 is down. S&P starting to go down. Just now previously, okay, it is up. But you can see that the the RSP, the equal weight, it is also coming down. Okay, Russell is coming down. And the NASDAQ equal weight, it is also coming down. The small cap, mid cap, it is also coming down. So all in all, generally today, the market, it is coming down. Okay, not so good. So again, like it seems like the price action, it is doing what I am anticipating. Again, I'm not predicting because I can't predict what the market will exactly do, but I can anticipate what the market could do. There are a few possible scenario already, which I just now told you. Yeah, so you can see the S&P, even though it is actually still slightly positive, that kind of thing. Okay, but you can see that the RSP, it is actually down quite a bit. So there's a few scenario the market can do. Okay, which is like retest the low again, or form a higher low and go up higher. Okay, or range bound a bit. So yeah, so overall, all in all, okay, I would say that don't aggressively, okay, go and load up your long position, okay, during this 1 or 2 months. You should be either sit on the fence, don't buy first, or just watch first or whatever it is. Okay, for me personally, to my SVI members, I'm actually looking for more shorts right now. Of course, you can buy some longs, okay, to hedge against your short, okay, or to if you are having some long position, you can also do some shorting, okay, to hedge your long position, that kind of thing. But okay, if you do not to short, okay, you can choose not to short and just stay aside. Staying aside, okay, I think it is fine. Okay, staying aside, it is fine. Okay, but all in all, I'm more bearish, okay, moving forward within the next 1 to 2 weeks or so. Okay, again, this is just my opinion. It doesn't mean I'm right. I'm just sharing with you. Okay, for the STI, yeah, okay, same also. Can you see? I think you should. Then you are from SVI, right? Previously, I mentioned about the SVI data is in the previous week's data also. SVI typically August, not a good month. Okay, STI August, not a good month. So yeah, and you can see the price right now STI is also below the CPR as well. Okay. Market was up during market open, but now most index down now. Any news on right? As of now, any news? I don't think there's any news today lah. But again, that what I have always been telling you guys, right? In a downtrend, in a correction, okay, it is 开高走低, open higher, close lower. Okay, typically in a corrective mode, okay, when the market is in downtrend, the market tends to open higher, close lower. So for those who are new to MarketWise Asia, for those who are new to me, okay, Typically in uptrend, okay, the market will 开低走高, 开低走高, open lower, close higher. In a downtrend correction, okay, the market tends to open higher first, then close lower. Very typical. Right now, it's a very typical example, standard example right now. Okay. All right. In the past week, price also opened higher and closed lower. Yeah, because it is downtrend, moving downwards, yeah. So some news on X is Iran might attack Israel within 48 hours. Not sure how true goes back. If this the case, then there is a sudden news hijacking the seasonal data. So okay, we will wait for the news to settle down first. Wait for the price action to show us, is to see if there's any so-called price action. So again, Wailam, okay, you're also from SVI. Okay, if right now gold is spiking up because the news say that Iran might be attacking Israel. Okay, so as of now, that's the reason, supposedly reason why gold it is spiking up. Okay, all right. If like I said, for example, within the next few days or so, okay, okay, gold suddenly have a reverse downward. Then I'll be very interested to go for a short already. Okay, yeah. So this so-called rally is very short-lived and it trapped all the longs over there and also coincide with the seasonal data as well. Yeah. So we just step aside first because of that. Suddenly there's a sort of fundamental news that's coming in. We step aside first. But if next a few days or so, suddenly gold have a dive down, okay, or GDX has a dive down, that kind of thing, right? Okay, then I'll be more interested to short already. Okay. Any questions so far? Okay. Also 1 hour already. I want to go below 1 hour, so also become 1 hour. Okay. Why war have impact on gold? Somehow it just, when there's a sudden news, all these asset classes, precious metals, all these also have a sudden reaction, spike up, that kind of thing. But it is very short-lived. Yeah, it's not long-lived. Yeah, it's very short-lived. Yeah. Physical gold. Yeah, so for me, I can't really give you a very absolute answer so because I don't really hold gold for the longest term, that kind of thing. So I can't really tell you to buy gold or not. But yeah, for me personally, if I really want to buy, I would prefer to buy Bitcoin than to buy gold. Yeah. I think that at least Bitcoin, the digital gold, have more potentially more ROI for me than physical gold. Again, this is just my opinion. Doesn't mean that I'm right. Yeah. So for me, I would prefer to buy digital gold than the physical gold. Yeah. Buy physical and keep. Melvin, let's meet for coffee lah. Then you tell me where you live lah. Then I will know where to find you next time. And in case I don't have money, I can go your house and take some. Yeah. Okay. Yeah. So I can't give you so I can't give you a very absolute answer whether gold is for me to keep or not, because I don't do that. Yeah. But I would really love to go coffee with you and tell me where you live. Yeah. There is asking, too early to try to identify which sectors and company will be strong when the market turn bullish again. Nowadays, I try to just look through the SVI data. So I'll just see the ETF and see what are the sectors or industry that is strong. And I tend to go after that particular proven sector or industry. Of course, I can go through the route of finding the latest sector and such. But I find that it is very tedious for me. Okay, I just stick to the try and proven method. I don't need to look for the latest sector that's moving and such. I always keep repeating the same thing and again, okay, based on historical data, seasonal trend. Yeah. So as of now, I didn't really look through what are the stocks, what are the sectors that could be moving ahead in the future. So I can't tell you an answer right now. Okay. Gold. Okay, gold. Not gold. Oil. Okay. Melvin. Okay. Oil, you can look at, okay, typically we are around this time for oil moving forward. Okay, it should be relatively bullish. So of course, right now don't try to long oil right now because price has moved up quite a bit already. Right now we are at the CPR. But after some pullback, I think we can try for a long, because you can go and check out equity clock and such lah, okay? For the specific dates, we have to look at the SBI data, if there is lah. But generally, oil, moving forward, I think towards the September, it tends to gravitating higher and such, okay? All right, so yeah. Angela is asking, do you think the rumor of oil will definitely will impact also, because right now oil, the war will impact oil. Again, whether this is short-lived or not, we don't know. But again, if the war news comes, okay, which is coming right now, like what Walam is saying, okay, logically, okay, that will impact the oil producing country, because it's in the Middle East, okay, all right. So logically, okay, intuitively, oil should go higher, which it did right now. Plus, with the seasonal trend that, oil by right in mid-August, late August to September onwards, it tends to go higher. Then we have a very good confluence for us to go for oil long. Of course, need to wait for a trigger lah. Cannot anyhow long lah. Wait for a trigger, wait for a pullback first, that kind of thing. Okay, yeah, that would be a good confluence. Okay. I also want to know where you live. Melvin, right? Okay, let's go and meet Melvin for coffee. All right. How about defense sector? Defense sector is ITA, right? This is the aerospace and defense ETF. Yeah, for the past 1 week or so, moving up pretty nicely, the rebound. But yeah, I have no opinion on aerospace and defense right now. Yeah, but based on price action, it looks pretty much okay after a sharp sell-off and then rebound up again. Pretty much okay to me. Okay, I think with that, okay, before I end the session, just to let you know again, okay, for those who haven't joined the Market Insights Trading Festival, okay, it's coming up, okay, this coming Saturday. So if you want to see me, okay, in person, and also the keynote speakers like the Daryl Guppy, the master trader and the inventor of GMMA, the Guppy indicator, okay, Guppy moving averages, okay, and Bini Ong and Kayong will be flying from Malaysia, and the IG market strategist Jin Rong, okay, do register for this event. I will share the link in the comments, okay, over here. Just click on register. All right, this is via Eventbrite, so you'll be brought to Eventbrite within the page. Few tickets left, okay, and just click register. For those who can't remember whether register or not, okay, don't in a hurry to register first, okay. alex@marketwiseasia.com, and you search for Eventbrite. You should be able to find the Eventbrite email inside your inbox. For those who confirm never register one, okay, can just head over and go ahead and register for it, okay. And then after first 200 attendees in person that day, you get an exclusive IG goodie bag, okay, and which is the travel adapter and the mug worth $68, which is here, okay, very nicely, okay, a gift, the mug and the travel adapter, very useful, okay. And then just to let you know what they will be covering, okay, the experts, okay, the speakers, okay, for Bini Ong will be covering, okay, from zero to hero, how to scan for opportunities poised for massive gain. All right. And for Jin Rong, okay, we'll be sharing with you the market outlook for the second half of the year, whether it's going to be a bull or bear. And Ka Yong, we'll be sharing with you how I made 3% per month for the past 3 years with algo trading. And Daryl Guppy, okay, the keynote speakers of the day, we'll be sharing with you the China and Hong Kong market key trends shaping the last lap of 2024. Okay, so for those who attended before our event, you should know that our in-person event, there's no selling of courses on the actual day on the event itself. So do just come here and learn. So there'll be knowledge and insights for you to take away. Okay, no selling at the event, so you can be rest assured that all you get, it is valuable information. Once again, I will share the link in the comments. Do register for this event if you haven't done so. Okay, really left, not much ticket left. Okay, so do register for it. So any questions so far? I think with that, I shall end my session. Mary, we don't actually announce, so because we really want people to come. So subject to change also. So, but yeah, these are the speakers. So do come at 10, okay, if you can, okay? All right. When are you going to have an event in Malaysia? Christina, maybe not so soon yet, because Malaysia is a whole different ball game and the logistic wise. Yeah, okay. Ken, I think with that, thank you so much for staying with me. So if you find value from today's session, okay, just type a value in the comments. All right. And yeah, and I shall see you, okay, this coming Saturday at the Market Insights Training Festival at Suntec City. Okay. So do register if you haven't registered. All right. So with that, thanks so much. And I'll see you this Saturday at Suntec. Thank you and bye-bye.